Our next guest is an opportunistic investor and says that his firm is currently enjoying the biggest business opportunities since the 2008 financial crisis. That's pretty interesting when you consider how the economy's been doing to this point. Victor Khosla is the founder and chief investment officer of Strategic Value Partners, which has $19 billion in assets under management. And Victor, thanks for coming in today.
Thank you.
I am a little surprised to hear that this is such a great time for you, because while you have a broad firm, your roots are in distressed debt, and you're saying that you're seeing more activity than you've seen since the great financial crisis. Nobody would guess that, given the economic outlook, given the jobs impact, given where rates stand right now. What's going on?
Our roots are in distressed debt and restructurings 23 years ago.
Yeah.
And as a firm, we've really developed out since then. We take control of businesses and look to fix them, improve them. We invest in real assets. So it's a much broader hunting license than just distressed debt and restructuring.
So where are you seeing all the activity right now?
Yeah, you know, it's across the board. And let me just set it up, right? So Becky, what we find is interest rates are higher. There are all these debt maturities which are coming due. And as a result of that, and by the way, trillions and trillions of dollars of deals have been done in a 0% environment since 2000.
Okay, so this is just that old business model of people relying on zero interest rates that they're still kind of caught up in, even though rates have come down recently.
Yeah, and you know, and this fixing which has to take place, it's not like a liquid distressed opportunity. It's much more, you end up having to buy stuff, improve it, fix it. And it's like this steady stream of stuff. And by the way, it's been going on for the last year. So even as you've had these really strong equity markets, strong credit markets, you have this flow of stuff which has been happening for the last year.
Why is that? What's different? Why did it come about that way?
It's you get a debt maturity. Oh, by the way, statistically, you have 5% default rates today.
Okay.
There was 6.5% in COVID, 12% in the GFC. So the default rates are really elevated, and you wouldn't expect that with these strong markets, right?
Right.
And what we find is, so if you look at, our business is US and Europe. The US economy much better shape than the European economy. So in the US economy, we clearly have, these maturities are hurting us. In Europe, the maturities are hurting. And in addition to the hurting maturities, you have a slower economy. So as a result, the flow pipe for us is it continues to build from where we are.
But it does sound like it's harder work.
Oh, everything. It's hard to make money, right? So look, when we buy a business, let's say, and we buy it through some sort of a special situation or a restructuring process, right? It's a business which has struggled for the last few years, laboring under this large capital structure, debt structure. So it's not just you've got to go fix the capital structure. You have to go out and you've got to strengthen management, build a new business plan, invest more capital in it. So it's hard work, right? And by the way, the returns as you kind of make your way through it, they really work. But this is not like, oh boy, there's so much debt I can buy at 60 cents and a year later it's 80 cents. Right. It's a whole different business today.
So where are those placements? I when you started talking about the debts that are coming due, I was thinking of office buildings and other places where they had some big loans that are out there. But are there other business areas, other sectors where you're seeing some big
so if you just look at us for the last year, we've taken control of 6 businesses and in the process of kind of fixing them. So one of them is like Hornblower, it's like the New York, the Statue of Liberty ferry, the Niagara Falls ferry.
Oh, yeah.
Another one is the largest car parking garage business in Europe called Apcoa. But there are 6 of these businesses we've taken over. There are, and by the way, they all require that sort of fix, that operational lift and fix. Real estate you touched on. We've invested, we bought 4 relatively large buildings for about $1.5 billion, give or take, between the 4 of them. These are Class A properties. We never get a chance. You know, when I think of the last 10 years, so few chances have we gotten to buy these kind of Class A properties.